It seems like the equity rally isn't showing too many signs of slowing down just yet. The Dow Jones Industrial Average closed higher on Tuesday. Index now holding on to a 12th straight winning streak. But can the rally go on? We see the Dow just barely positive today. Let's bring in Callie Cox, eToro, USA investment analyst, to discuss. Callie, great to see you as always here. We've been talking about the Fed decision expected in a few hours. We've been talking about that all day. You're looking at a very interesting situation that has arisen since the last Fed meeting, and that is the rise in cyclical stocks. So what does this mean for the Fed and investors today?
Yeah, so Jared, I see this as another sign that markets and the Fed are getting on the same page here. I mean, for the large part of the year, Powell has come out and said, we think the economy is strong. We're trying to get inflation under control. We're seeing progress there, but we're not convinced yet. So we're going to keep rates high for a while. And finally, the market is on the same page. They believe that the economy is strong, and we've seen that in surprisingly decent economic data lately, especially on the consumer side of the equation. But at the same time, if you look at Fed fund futures, basically the bond market's way of projecting where the Fed will go from here, you see that they don't expect rates to change much through the end of the year and into the middle of next year. So I see this as a good thing. I see this as markets and the Fed finally speaking the same language. And for the longest time, there was a disconnect there, which was causing a lot of angst.
Yeah, and there still might arguably be some disconnect there. We're looking at that chart on the screen of expectations for that terminal rate of the Fed funds futures. You can see rate cuts are getting priced in towards the end of the year, early next year. That might be at odds with the expectations of a soft or no landing. Talk to me about how you're approaching that with some of your clients.
Yeah, so this confused me a little bit too. And what we're hearing from customers and clients these days is that they're worried about higher rates and the potential for inflation to come back. I mean, we do a quarterly survey. It's called the Retail Investor Beat Survey. And investors told us across the board, across a 3-month and 12-month time frame, their biggest worry is inflation, which doesn't really match up with what we're seeing priced into the bond market when it comes to Fed rate projections. I mean, you'd think that if we are going to get some rate cuts in 2024, that would have to come along with some kind of economic weakness.
Sure.
I'll step back and say it's encouraging that, the Fed's dot plot is expecting this as well. I mean, Fed members do see 3 to 4 rate cuts going into next year compared to the end of this year. And, they see a little bit more weakness, but the unemployment rate projections don't necessarily show that we could hit a severe recession. So, I'll give Fed members and the markets the benefit of the doubt here. But it is still something to watch for.
I'm sure they appreciate it as well. I want to draw everybody's attention to the Wi-Fi Interactive to show another chart that you brought along here today. This is the S&P 500 earnings yield. This is that purple line that begins up here and terminates right here where I'm circling. And it is now just crossing over with the 12-month bond yield. Really interesting that something as short a duration as 1 year in the T-bill realm is yielding more than the stock market. And that just means there is an alternative. How is this changing the investment landscape, Callie?
Yeah, so this is a worrying chart, and it's for reasons that you just said, Jared. I mean, interest rates change how we think about risk and money. And if you can get essentially the same yield that you can get in the stock market through earnings on a 12-month treasury bill, which you could probably argue is a lot less risky than investing in the stock market at this moment, then some people are going to go for it. And that's what we've seen for most of this year. And so far, it looks like the equation isn't really changing. And this is where higher for longer rates can come back to bite us. The fact that there isn't as much money circulating in the system, and the fact that investors have to make these hard decisions. This, if I had to put up a bear argument, this would be the one that I'd point to. The fact that the stock market might look a little expensive at the moment, but it looks expensive, especially relative to bonds.
All right, we got one more chart on the Wi-Fi Interactive. We talked about the cyclical stocks before. You have come up with, or you're representing here, beach stocks, and this is an interesting index. Maybe you can break that down. It has been outperforming the S&P 500 and the NASDAQ this summer. You can see 15.9% versus about 8 or 9% for the benchmark indices.
So when we talk about cyclicals rebound, I mean, one area that's really become reignited here has been travel and entertainment stocks. And I can't take credit for the beach stocks acronym. My colleague Ben Laidler actually came up with it. But it's an acronym that stands for booking, entertainment, airlines, cruise, and hotel stocks. So we have this basket of beach stocks, fun little analogy given the season that we're in. And we looked at how it performed since Memorial Day, basically when summer started. And it's up about 16% compared to about an 8% rise in the S&P 500 and a slightly better rally in the NASDAQ 100, which is funny to me because everybody's talking about tech stocks and how they're dominating the market. And that's just simply not true since the beginning of June. But I think that shows that there's a recalibration going on in portfolios right now. The fact that we were way too offsides about the economy, in the middle of this year, and for good reasons. I mean, we had a banking scare happen, and growth is slowing across the board, but the economy is being resilient. And now that inflation is down to a somewhat manageable level, investors think that the Fed can pull this off and the economy might make it through unscathed.
Yeah, something noble to hope for. Always great to talk with you. Callie Cox, eToro USA Investment Analysis.